Futures are slightly up this morning after stocks hit the lowest they've been all year yesterday. All three major domestic indexes dropped by at least 2%. Yesterday was the first time the S&P fell below 4,000 since March of 2021. A big contributor to that downward trend, tech stocks are taking major losses. They've lost more than $1 trillion in value since last Wednesday when the Fed raised interest rates. Apple alone has lost over $200 billion since then. In response to those tech market drops, Uber is cutting costs. In a letter to employees, the company CEO says hiring will now be treated as a privilege and that marketing and incentive spending will be slashed. Large stock sell-offs and dip buying continue to swing the market as well. President and CEO of Commerce Street Capital, Dory Wiley, is here to discuss what is going on. It's like look, I'm not even looking at my 401k. I was one of those people that got into, stocks on Robinhood, like I know anything about it, which I don't. And I'm not looking at those either because it's a bloodbath. What is behind these fluctuations?
Well, good morning, first of all. And you're right to not look at your 401k because you won't like what you see. And the tendency is to react and sell it at the wrong time. So just leave it alone and it should hang in there fine, assuming that you have a good allocation to begin with. But what's going on out there is the market's trying to react and find out and reposition itself. We had a little bit of a valuation problem with markets being a little bit overvalued. Coming into this earnings season, earnings softened just a little bit, but they're hanging in there. And the market's just very, very uncertain with inflation, with the outlook, with the uncertainty in Ukraine, supply chains, et cetera.
So listen, I don't know much about stocks, but I do know you're supposed to buy on the dip. Do you have any advice for people who are interested in buying?
You bet. If you like buying on the dip, there are definitely opportunities. I try to take the emotion out of it. Short-term markets especially are ruled by greed and fear, and I'm no exception. So the technical thing that I watch for is the VIX, the volatility index. When that gets to 36, I make sure and buy something of good value. In tech, that would be Amazon. In oil, that would be Chevron. In consumer staples, it might be something like a Walgreens or a Walmart. And
so how should people sort of best prepare for this sort of volatility? I mean, is it that you just don't look? Is that the best advice?
Well, for the general public, absolutely. Always invest for the long term. And if you do have some extra cash, and who has extra cash, right? But if you do have cash, it's a good time to buy on volatility when it gets to 36. It's not at 36 right now. The volatility index is at 34. But I would say always keeping a little extra cash at night to buy on dips or just to have around for a peaceful night's sleep is a good strategy.
Yeah, can you buy a peaceful night's sleep? That would be nice. I would invest in that. Dory, thank you very much.
You're welcome.